Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 17th of September. There's been a significant move in markets in recent days, actually really coming over the weekend, where those drone strikes in Saudi Arabia took out around about 5% of the global oil supply. And has really had a massive impact on the oil price. Big jump in oil yesterday. I think it was 14% higher on Brent crude and WTI. So really strong moves there. And the markets are still reacting to this. There's a significant move whereby Treasury yields started to fall away. Certainly there are two sort of conflicting aspects of a sharp rise in the oil price. You've got the growth aspect and the inflation aspect. Certainly, sharp rise in oil price is inflationary, and that should be dragging the longer dated bond yields higher, but also it's negative for growth as well. So in fact, the markets are certainly focusing on the negative aspect of growth here, dragging treasury yields lower, and also the move into safe havens as well. That comes as a result of that move. So we saw equity markets lower yesterday. We saw the dollar gaining ground as well, and rebounding sharply there on the dollar. So really strong moves. A little bit of a consolidation starting to creep into markets today. We've seen equity markets fairly stable. When I first started looking at markets this morning, S&P 500 futures were down about 0.2%. They're now up 0.5, about just over flat, just above flat, so about 0.25% difference there. So it's interesting that we're seeing European equities just slightly higher today, broadly speaking. Gold is being sort of impacted by the stronger dollar, which we're seeing pretty much through the risk asset currencies, which are lower, and also sterling, which is lower. You've got a big court case in the UK surrounding the illegality of Boris Johnson proroguing Parliament in the UK today. So how that court case pans out will be interesting for sterling, and just generally speaking, a little bit of a risk aversion. But generally, what we will see is these spikes in markets tend to go overdone, and then they start to drift back. But you're not really seeing too much of that quite yet. A little bit of a 1% loss on WTI today, but Brent crude fairly flat at the moment, interestingly. So how will this impact markets on an ongoing basis? I think I'll be looking at treasury yields. If treasury yields continue to drop away and reverse this rise we've seen in the recent 2 or so weeks, that I think will have an impact across markets in due course. So in terms of data points we're looking out for today, we've got the sorry, we're not on the 21st, are we? So we've got the German ZEW economic climate today, economic sentiment, expected to go to 37 negative. Now let me show you that German ZEW. The German ZEW has been under huge negative pressure, falling to 7-year lows there. So that's still pretty negative, although a tick higher sort of abates some of that. I think it's still very negative in terms of the ZEW sentiment there, and also the current conditions not great either at multi-year lows as well. So generally speaking, not great there for the German ZEW. Then we're also looking out for this afternoon a bit of US numbers with the industrial production at 2:15. Industrial production for the US expected to be 0.2% positive, so that's not horrendous. Capacity utilization up as well, and then we're looking out for the NAHB, which is expected, housing market index, which is expected to remain at 66. So that takes me on to my chart today, which is euro sterling. Now we've seen some significant moves in euro and sterling recently. But what we've seen is the continuation of this sterling recovery against the euro, and it's now breaking through key supports, 88.70 to 88.90, these old key lows from June and July, starting to be broken. That came on Friday, and again also yesterday. We've had a little bit of a tick higher today, but I think rallies are a chance to sell. You can see that time and time again where rallies have been sold into in the last few weeks on sterling, on euro sterling. So these consolidation moves continue to be sold into, and you had that on Friday. A little bit of a breach of that support band 88.70 towards probably the 50% fib level of 89.05 area. So you've got a resistance band 88.70 to 89.05, pretty much a sell zone now. You can see that on the hourly chart where that around 89 figure, old support of the last week or so, has become resistance. So again, that's similar to what we've seen previously, where we've seen old support becoming resistance overhead. So we've got the 89 figure area, 89.75, and then 90.015. But yeah, I think it certainly looks as though that rallies are now being considered to be a chance to sell on euro sterling. You've got negative configuration across the momentum indicators, certainly on RSI, MACD and stochastics, suggesting further downside potential. And I think we're likely to see a test of the 61.8% fib level at 88.05 area as the rallies, as I said, get seen as a chance to sell. So we continue to see that. I think that sterling may well have a bit of an impact from that court case today, but at the moment I think we continue to see that rallies on sterling are seen as a chance to buy sterling, and therefore against euro sterling that would be a chance to sell. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars. Thank you.